Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar was relatively whippy after the RBA released its rate decision, which kept, as widely expected, on hold. The market rallied to a high around 76.60 and pulled back rather sharply. Not quite seeing the breakdown yet after respecting the level around 75, 35, 45, but still I feel the market from a shorter term time frame has actually weakened. Keeping an eye on this pattern, because if we do see a break of 75.40, then that would give further indication for a further slide, and that is down towards the region of 74.5. Now, with that being said, if we failed or rejection from that 75.40 level, then we could see one more retest up towards that top side, anywhere from around 76.60 to about 77 figure 20 area. Overnight, the dollar index, which measures the greenback strength against a basket of 6 major currencies, rallied further, and that put further pressure on the euro, and now reaching its first objective of 109.30. Now, with the break, we can see that the market has actually potentially opened a further downward slide here and looking towards 107.50.85 as a target, as the indicators are slowly marrying up to a stronger bear case and therefore could see further weakness. Later in the day, we do have out of the US, the US Federal Reserve minutes. Keeping an eye on that, because seeing how strong the Fed Chairman, Jerome Powell, views the market in terms of the fact that they could be looking at 50 basis point rate hike in their next meeting. The dollar yen finding a little bit more of an upstep overnight and gradually edging towards that recent highs. That's more to the fact 7-year highs around 124. Currently trading around 123.70. The market is still somewhat a bit of a uncertainty at these levels due to the slightly buckled technical pattern here that could see a rejection again like we saw previously and look back towards 121.5. Sterling a little bit weaker overnight, but nevertheless not quite breaking down to where I would be getting uncomfortable. At the moment, the base is still seen somewhere around 130 to 130.70. That's where we are at the moment. And if so, the market may actually stage a recovery because the MACD is still coasting very happily with a positive signal and therefore could see the RSI snap to the upside and then see a rebound from the current lows and still look towards that top side of 133. We saw a bit of a downward test on the overnight session for sterling Kiwi, and the market is actually failing from what I can see from this hammer. It's a weak hammer, but nevertheless the market did take a challenge, and you can still see there is divergence here. Can't really get negative at the bottom of this range here, so therefore I feel that we could see a slow climb, but really it really boils down to that is to this hammer, and that is the fact that we could see it push back towards 190. Gold was weaker overnight. It did have a brief look above 1,940 and then fell rather sharply lower. In light of the pattern here, we can still see the midway point is containing the bulls as it's failed to break above there. Therefore, the bears may continue to weigh on this market and therefore look towards 1,900 and reassess. A break beneath there would give further indication of a weaker play, that is to 1,870 roughly. Finishing up with oil. This whipsaw price action continues. As you can see here, the market did rebound, but it failed to sustain, and now looking back towards this level of 97.70. If we see a break here, that would give further indication to a drop to around that 92.93 area. Also, the fact the RSI did actually reject that midway point, which gave the indication for the bears to come back in larger numbers. And let's see if they will continue to weigh on the markets today. Well, that wraps it for the morning. Thank you very much for joining me, but please join me later for the end of the day wrap and also keep an eye out for the intraday report.